Singapore plans to bring forward more certificates of entitlement from periods of high supply to supplement times when fewer COEs are available. The goal is to reduce volatility in quota supply and moderate COE prices. It builds on a move in May that resulted in more COEs.
It's called the cut and fill approach, bringing forward COE supply from guaranteed deregistrations in future peak years to meet today's demand. And the Transport Ministry's move in May to do that has yielded results. COE supply for the category that includes smaller cars went up 11% in the second quarter and then 22% in the third. COEs for bigger cars in category B edged up 3 and 6%, but demand is still exceeding supply.
Demand has remained very strong and COE prices have continued to rise. We will therefore do further cut and fill to bring forward more quota from the peak years to fill the current troughs, while maintaining our zero vehicle growth policy.
The government is already increasing the supply quota this quarter by 35% for both the A and B categories. It now wants to ensure this continues to go up next year until the peak supply years in 2026 and 2027. But borrowing from future peak periods to feed today's demand would require a balancing act.
So what it means is that in the near term, we do have the risk of having more cars on the roads in the next few years before the cars are deregistered during the peak years. But this is a trade-off that we have to make in order to strike a balance between the volatility and to be able to do some cut and fill to raise the supply in the current trough years.
The Singapore Vehicle Traders Association says while the approach can help moderate prices, this is likely more of a temporary solution.
Because whole thing is only very short, you only can do cut and fill until 2025 probably, because the peak is at 2026, 2027. These 2 years is a peak, yeah. So you only can do, so this is a short-term measure.
As to who's been driving up demand, the acting Transport Minister says Singapore residents accounted for the lion's share of COEs for category A and B in the last 3 quarters, with foreigners making up less than 5%. Households with multiple cars also declined from 19% in 2012 to 15% today. Car leasing companies were not a major contributing factor either. Mr. Chee pointed out that demand from car leasing companies were down in the last 3 quarters when COE prices rose.